Has the S&P passed its old highs? We will look at the midweek report ending April 17, 2019. This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on the examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. International markets involve special risks such as currency fluctuation and political instability. These risks are often heightened for investments in emerging markets. International investing may not be suitable for all investors. Investing involves risk, including loss of principal. Sector investing will be subject to greater volatility than investing more broadly across many sectors and companies. On this week's agenda, we changed it up a bit to show midweek reports. Has the S&P passed its old-time highs? There is a leading group in the US and a group that has just recently gotten hit. And how has the US 10-year Treasury note reacted to all this? And what does this mean? Since our last video, the S&P has struggled to climb higher. Still within reach of hitting the all-time high, it looks like we are beginning to hit a wall. After having ended the previous week strong, the S&P has been negative 2 of the first 3 days this week. Let's look at what the chart tells us. 1, the 50-day is above its 200-day moving average. Price is also above both good indicators. Another positive sign is that it appears the long-term moving average is beginning to slope higher. All very good signs as the S&P attempts to get into a bullish run. One note of caution is that we have yet to pass the all-time highs, and looking at the MACD below, we may be slowing down in momentum. Will this be a top in action before the MACD turns negative and we have a pullback? And if so, will it be a short pullback and finally begin the next charge that will get the S&P into a bullish run? Let's see if the MACD does turn negative just as the S&P is within arm's length of passing the all-time high. Now, despite the S&P slowing down, the Semiconductor group has continued its recent monthly uptrend. This week, it looks like the index has picked up even more steam as upward price action has accelerated. The moving averages are both moving upwards. The 50-day has been in an upward slope since January, and now the 200-day is beginning its upward slope. All great signs as this group tries to start a bullish run. The MACD confirms the recent strong run by this index. How long can positive momentum continue? And if so, will this group lead the next rally in the S&P and the rest of the US markets? Now, what may be holding back the US? It may be the healthcare index. Just this week, there has been a huge sell-off. What seems to have caused this? There has been no earning news that would have given this type of quick sell-off. It may turn up to be the news cycle that Bernie Sanders had discussed in Medicare for All. In fact, all the groups in this sector has participated in the recent fall. Pharmaceuticals, biotech, medical equipment have been hit. But what do the charts tell us? Price action is of particular concern. Price has dipped below its 200-day moving average, so that is never a good sign. The one positive is that the 50-day is still above its 200-day. Now, the MACD is still in negative and has struggled to stay positive for too long. While I don't like to put too much on news event driven rallies or falls, the one concern is the price action. How long will price stay below its 200-day moving average? At what point does this index find a floor? It would be good to see one soon. With momentum of the S&P seeming to be slowing down a bit, how has the 10-year note fared? Actually not too well. After hitting a high in late March, this index has pulled back quite a bit. There is some short-term good news. One, it has seemed that price has hit a short-term low. But price is above both its rising moving averages, so that's good. Also, this type of pullback has happened before. When the 10-year note hit the original high early in the year, it had a pullback, then struggled in a tight price range before rallying in March. Will this happen again? The next rally will let us know. What does this mean? The S&P is very close to entering the first phase of a bullish run. It has been a struggle to get forward momentum to break through the old highs, and we may be topping out. But the fact we are this close does give me cautious optimism. Even if there is a pullback, as long as it does not last too long, we may then get positive momentum and then see if the S&P can finally enter a new bullish rally. While semiconductors have done well, it has been mitigated by the recent sharp losses of the healthcare group. For a new bullish run to begin, there have to be more participating sectors and groups on the upside. The 10-year note has struggled recently, but it may have found a floor, at least short term. It has struggled before after hitting an all-time high, and maybe this is another time it does so again. Or will a bounce back be short-lived and the end of the 10-year note bull run begins? Markets are about patience, and now as we get really close to a bullish rally, a pullback may indeed be in the works to test it. Let's see if there can be a strong push higher to get price first above its all-time highs and then try and get confirmation that a new bullish run has begun. Thank you for viewing my video. Please like and subscribe to my channel for future videos. Also follow me on Twitter at my handle HRSNYC.